Dornbush download 157. I'm back after a couple of weeks hiatus, and of course the brains of the operation, Dan, is here with us as well. Sure. Dan, interest rates yesterday.
On hold, Andrew.
On hold. Thanks very much, and we'll see you next week. Seriously,
14 months now.
There wasn't a lot happening in the commentary. In fact, there's people that sort of do word track changing. So what that means is they get last month's statement, they get this month's statement and try and sort of compare the two, and there was basically no difference, nothing going on at all. So are you sort of in the camp where you think interest rates will go up next year, or are you in my camp, the disbelievers that interest rates will stay steady? Where are you?
Yeah, if they do go up next year, it won't be till late in the year, I think.
Okay.
I think they're really hanging their hat on wages at the moment, Andrew, aren't they? And wages aren't going anywhere, hint. But seriously, wages, they're not rising. And subsequently, people are spending from debt, and that's a worry that they've got to keep a handle on, don't they? So,
because as interest rate starts going back up, what's credit cards at the moment? They're still, other interest rates have come down, but basically credit card debt has not. No. But inevitably, as soon as interest rates start going up, that will start going up. And so therefore, as a consequence, you can just see that the RBA is so concerned about what people's debt burden is going to be.
That would be a lot of pain in the community if rates really got ramped up.
Well, what are they saying? Like the median house price in Sydney is $1.2 million and the average debt is about $900,000.
And you've borrowed interest only for that.
Yeah, so sizzle, burn, using a financial term. Yeah, it's not good at all. So I'm with you. I think interest rates, if they go up, I'm more on the hold, but if they do go up, it's going to be later because you're right, wages growth is just non-existent. Yeah. Non-existent.
And funnily enough, Andrew, in saying that, rates are starting to go up around the world, aren't they? And looking at the US, those rates are going up, and it's going to be positive for our banks. So.
Oh, absolutely. Short term, it's a positive, so that net interest margin, that NIM starts increasing, but there is that pressure point where, people start falling over because, as you know, our bad and doubtful debts are at record lows. In that Commonwealth Bank result there, bad and doubtful debts was like 0.14 of 1%. It's a rounding error, basically. So interest rates start going up, that is going to be a problem. What else has been going on whilst I've been away? Markets humming along?
Humming along sideways.
So week 18, stuck in this
5,600
to 5,800 trading band. I see we're off about 50 at the time of filming this.
What's the story today? I just can't see anything there.
The markets but didn't go up like 50 or 60 on Monday. Dropped about 20 odd yesterday.
27 yesterday.
So it's just continuing to be stuck. Again, coming into bank profit reporting season, that might support the market. But anything else on the go at the moment, or we're just
not really,
stuck
Andrew?
In this
maybe
malaise?
We'll get a bit of a lead from the US. They're coming into third quarter profit mid-October, so they've been sort of talking the market up over there, thinking that profits will be okay. So.
It's interesting you reference offshore, and as you know, we've been focusing a lot on offshore investments here this year. We're certainly at the moment allocating shares in Magellan, so if you're interested in some Magellan shares, have a chat to us about that one. That's going to be probably the largest global listed investment company this year. But having just come back from the UK and also France, one of the key things that I saw over there, albeit just for a week, so it wasn't a huge sample, was that there seems to be renewed optimism. The shoppers are out there, they've got their bags, and my number one question when I go into a shop is, how's business? And they're in very bad French. Even some of the English people didn't sort of, g'day mate, how you going? But they're all basically saying to me that, business is improving. Yeah. And, that litmus test down the Champs Elysees, they're walking along carrying their shopping bags or they're just browsing, and there was a lot more shopping bags. So, we've been looking at European ETFs as an example. Hoo-ha. There's another one which has sort of come onto our recommended list just before I went away. But certainly, if you're looking for global exposure, again, these exchange-traded funds, because, as we're lamenting, Australia is now what we think is ex-growth. So basically, if you're looking for dividends, Australia's the place to be. But if you're looking for growth, Australia's not the place to be. You really do want to have that offshore exposure. So whether it's through like what's that APL that we just did, Antipodes, LIC, or as I said, Magellan, VGI is another more recent one, or again, looking at some of these ETFs, really starting to steer your portfolio from a heavy domestic Australian bias and maybe, not saying that you need to sell all those shares, but just over a period of time starting to pivot towards.
And on the other side of that, Andrew, if international's not your thing, there's some growth prospects coming up in Australia, isn't there? Gas.
Oh yeah, there are particular pockets in Australia.
And electric vehicles through copper and lithium, etc. So
and the galaxies of the world have been having a run, and
Orocobre, Kidman. Yeah,
plenty to look at there.
Yes.
Anyway, that's enough from us, I think, for this week.
Back to work.
Till next week.
Cheers.